Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Tuesday, May 13th, 2025. I'm just getting back to my desk after having to got a whole lot going on here with a big homeowners association snafu and some things going on. So I've been involved in that. And I'm good now. We have to go back. I have one more meeting at 5, so I don't know if I'm going to be able to get another update out later today. I just want to do an update on the equity markets, and time permitting, I'll get into the other things, some of the other trade ideas recently, gold and GDX and natural gas, everything else. But I'm going to start here because what I want to do is take a look at volume and also share my trading plan, which hasn't wavered. So today I will be taking out, if we don't get a dump into the close, it would have to be a dump that takes us, fades at least half of today's gains. If so, I'll sit tight. Otherwise, I'm going to take off a quarter. I'm going to scale out of a quarter of the short position, which again is a fractional short position. Always has been. I shared my trading plan back here to start scaling in, but not go to a full position until and unless not to add to that position until we fall back below the trend line there in the 200-day moving average. That hasn't happened. So we remain above the trend line. So I still have a not what I call a full position in the on the NQ shorts, and this is my plan, was and still is. Now, if we start to run today, I'm going to show you why I will sit tight. But otherwise, I'm going to take, if we close at or near today's highs as we're heading into the close, I will close out again one quarter of that long term. That's the starter, which is it's close to a full position, but not all the way forward. I told you I'd have plenty of dry powder to add if we break down below there, and especially if we get back down below there. And I maintain that. So let's look at where we're at. So we're above the 200-day, although a lot of stocks are still, even some of the big market leaders are still at or currently testing the 200 days, especially when you look on the weekly charts. See how this week ends. I'll bet you we'll have quite a few that have stopped at or get rejected there off the 200s. We've had several go above, and that's why my plan has not wavered. I have not, will not add to swing shorts on the Qs above the 200-day moving averages, as I stated I wouldn't. But I did take that NVDA short. I don't take every trade post on the site for many reasons. Sometimes I have complementary or similar trades, or I'm passing along something I like. NVDA I like, and I'm going to go over that one in a second here. And it's also, NVIDIA is highly correlated. To be long or short NVIDIA, so it's probably about an offset, if you will, of the amount of the Qs I'm going to reduce today, unless, again, we turn around and dump into the close, which would surprise me one bit. But let's take a look here. So that's where we're at. We're above the bounce target zone, so that remains and still is the no-go level there. We need to get back down above that trend line and into that zone there. But what stands out to me, if you recall, including up to this peak here, quite over the years, I've shared my low volume indicator. That's what we're looking at here on QQQ. And what I have are two levels there. You can see a red line down at the bottom and then a purple line. And so these are extreme drops in volume. What you're seeing the red and purple lines at are the 10-period exponential moving average. So what I do, because volume on any given day, you have holidays, abbreviated trading sessions, or the days before around, 4th of July, Labor Day weekend, just where trading volumes plummet, or again, you have those half-session trading days. So by putting up a 10-day exponential moving average on volume, it kind of shows you the trend where volume's going. And so the red zone, you can see when you get down to the red level, that's extreme low. It means nobody's buying. That happened before COVID. Those in the know, whatever reason, the market was going up, looked like it would never stop going down, and that's typically a sign of retail investors buying in, with the institutions passing the torch, if you will. Either way, it's just something that you'll notice. You can see these extreme periods of low volume happen typically before sharp corrections. These are all double-digit plus drops and remember, this is a line chart. It's not a candlestick chart. So that's showing a 12% drop high to low. When you put up a candlestick chart, quite often you have you have much higher intraday highs and lows. So that would be most likely a 12% plus drop. And then what happens is after the big drops, especially the tops. Now remember, we don't have a lot in recent years. There haven't been many and in my opinion, not a real bear market, just these big corrections that qualify, meet the 20% drop definition. But you can see down here, we started firing right on the line. These came close. That was the first hit, that red line. And you had this little shot across the bow. And so what happens then, almost always, just know this, on a down, when the market is in correction mode, volume is usually, most often, higher than it is in a uptrend. So just accept that. So don't read too much into the high volume when you're in a bear market. What you want to see on the uptrends, you can see the volume kind of hit that peak, that extreme low level. Again, the 10-day moving average, that helps smooth it out. And then you get a corrective wave. And then that's where the purple line comes in, usually after either the top or a precursor to the top, which comes shortly within just usually percentage points, just a few percentage points of a marginal new high. Then you come down to the purple levels. These are multiple hits. We had 1, 2, 3, pretty much hovered there. With, again, extreme but a little less extreme. That's what the second line is, the purple line level. And that is it. That marked the high right there. We had one more drop to that level right there as the market was peaking out back in late 2021. If you recall, the Nasdaq peaked in October, I believe it was late October, sometime in October, early November. Maybe it was November, one of the two. And then the S&P followed suit with the Nasdaq failing to make a new high. S&P made a new high in the beginning of 2022. And again, it'll look the same. You have the low volume to that second level, and then boom, the rest is there. And the bear market played out. Fast forward. This was a big drop last summer. We traded in July. We hit that level. Volume started plummeting down to extreme lows. I warned of at the time. There were other reasons, of course, to go short. But again, I'm just identifying volume patterns, what's going on here. So you had that big drop. But remember, that was a one and done. And again, that's that famous August 5th low I keep referring back to, where the morning of posted a hard reversal, I called it. Cover all shorts, even though I had longer term targets, and go fully long to a hard long positioning, because of the fact, again, so many things were happening that day. Price targets on QQQ, NQ futures, SPY being hit, 200-day moving averages, price targets on a lot of the market-leading stocks like NVDA, everything else being hit. And so that was more of a correction. And then, however, the market went up. That's still a marginal new, ever so slightly high over where it peaked last year. Then we went in that trading range, if you recall. We hit down, volume started getting, again, nobody was buying up here. It was super low volume. You can see the extreme drops to these extreme levels. And then, boom, we had this first big drop, which I still maintain is likely a first wave down with another kickback rally here. And you can see we had a drop right here. Let me put the crosshairs here. I missed that one. Right here, we dropped down to the purple level, meaning there was a rally on declining volume. Again, look at the 10-day. Hit that level to the button, and the next big drop came. So I wanted to point out that's where we're at now. So it either plays out or not, but you can see volumes have dropped down. Again, what this is, and I'm going to flip over to SQQQ. If you recall, when this thing started, when the top was in a few months back, we were going down. I told you I was starting to study and focus on volume patterns in the leverage ETFs, knowing and reading about a proliferation of traders. These guys have been around for a while, SQQQ, TQQQ, but lately, especially since COVID, you have the Robinhood group. A lot of new retail traders are in the market, and this is articles have confirmed it's one of their go-to proxies. So when you look at, and I told you I would be doing this, monitoring volume patterns, remember SQQQ is a 3-time short. A surge in volume. You can see volume coming up. Yeah, SQQ's had some reverse splits. They had one there, but you can see steady and just a ton of money coming in here. And so this is, we know by looking at the short interest lately, this is a massive short squeeze, and you can see that the retail crowd had piled in. I talked about the time too. You're going to see these SQQ folks getting squeezed. So what I want you to look at is that same 10-period moving exponential moving volume, so the exponential moving average. this is a lot of that is selling. You can see SQQ plunging, and you see these folks getting stopped out or stopping out, whether they're getting forced margin call selling. But look where the volume is. It's well above the previous spike here, especially on the 10-day. Volume's still very, very hot right now in SQQQ while it's plunging in QQQ, as I just showed you. Now flip it around, look at TQQQ, the 3-time leverage long. Whole different story. See what it is. Nobody's buying this because they're not getting squeezed out of it, but they're not buying it either like you could. And again, I'm speaking not literally, metaphorically. So there's that huge plunge. The 10-day has fallen below that previous spike, whereas on SQQ it's much higher. So that's what's happening right now. There is a lot of selling. A lot of folks, again, it's evidenced simply by the volume. You can see piled in. These yellow bars just show that they had to truncate. The way I put the scaling here, the volume is truncated. That's what that is, if you're wondering. So you can see that massive surge into SQQQ on that last drop. I talked about it at the time and said, we'll have to squeeze all those folks out. And apparently, it's evidenced looking at SQQQ versus TQQQ, there's still a whole lot more volume here. And I think it's safe to say these are folks find a lot getting squeezed out. And then if you look at things from a simple sentiment perspective, so NVIDIA, like I said, is a standalone. And let's not forget, NVIDIA peaked long before the stock market. So this is as good a time as any. Right now, you have just indexing. You have money moving in and out. On a day where you have a lot of money moving in, it's going to drive up all the heavily indexed stocks up. Likewise, when it goes down, we saw that a few months ago when things were in free fall. You're going to see all the index stocks go down. But you can see NVIDIA peaked back here, really double topped right there, had this peak. And that was although NVIDIA has been covered in videos here and there, that was the last official trade idea, the post I got out to you this morning on NVIDIA. We shorted there that was here. It's right here. And so I want to look at that. That was on February 20th. And again, you can see from there, again, I've been doing this long. Nobody wants to short NVIDIA on a day like today. Everyone wants to buy NVIDIA. In fact, the only comment that day was me just saying, hey, because somebody had previously asked about, they used the inverse. I'm not a big fan of the leverage inverse ETFs unless it's the right market condition. I told you before, my preference on the accounts that I don't have and use futures in, PSQ was the preferred proxy, which is a non-leveraged short on QQQ. So that's what I'll be closing out a quarter of today. NVDS was a one time. But when you go back to that point back then, again, the market was also top in the previous update to the stock market. Let's look at this one, swing trade ideas here. And it just kind of shows the mindset that, remember, here, before I do that, before I read these comments, that's February 13th, the previous market update before we shorted NVIDIA right here. And again, we had previous trades on it. That's where we covered it, the August 5th lows there. Post as a time to cover it, go long. The DeepSeek gap, right there was a very technically significant level, and that was backfilled. And then we had also the breakdown right there, and so from there, without any further ado, NVIDIA dropped 38%, and now we've come full circle here again. Swing and trend trades. That this trade, just like back then, was the specific entry was kind of honed down using the daily time frame, but the price targets are based on a weekly. So if I'm trading the weekly charts, which I am in this one, this was posted as a longer term swing/trend trade. I'm going to go off these weekly charts. And so you can see right here, you have resistance, you have the 200-day, and I'm willing to bet good money, which I did with my own money today, shorting NVIDIA, that the stock will most likely close back down on or below the 200 moving average. Again, it tends to go through there. It's not unusual to have intra-week breaks. And then the next likely target is T2, which would give a drop of about, I'll get close enough, not today's highs, about 40% or so, 41% to that next target's hit. So these are still, they're still the longer term targets, but just like we did back here on August 5th, and just like we did here on whatever that last update I gave to you today, April, there was time to cover shorts and go long for the anticipated bounce. And so if we go back to that point in time, which again was February 20th. And again, the previous update that I gave you on the market was before that. I think we had a long weekend in there, if not mistaken. QQQ, my preferred trading proxy, right there peaked on the 18th. So right here, 2 trading days before that. Remember, there must have been a long weekend because that is February 13th. We had about exactly 0.7%, less than 1% more upside to go in QQQ. If we go back to, all right, so we go back to that post right here, February 13th. Again, general market analysis, and you kind of get the idea of, where most people's mindset were. It could be, again, Trump, good news coming, maybe not. Could be an up day, but the usual. Stocks are going to go higher, right? Because we were at all-time highs or within spitting distance. We were testing the previous highs. If you want to make money this year, it better go long again, just like the last 2 years, exactly. And so my point is, it wasn't a single, yeah, that looks like a good short. I want to take that short then. Nobody wanted to short the market now. NQ has momentum fuel shoot to send the Nasdaq to new highs and more. Again, market's going up, market's going up. Market will always go up by every dip. All right, there's not a lot to update. Gold has peaked here. We're still above, so there's really no update needed. Still above the bearish engulfing, the island cluster top, the divergent high, moving sideways. And GDX, which is really the go-to proxy for that trade, that's based on the 60-minute chart right here. We're below T1, so that should be, quote unquote, should be, remember, upon the initial tag each target, reactions likely. We got the reaction off T1, and then after that you're open to, that doesn't mean you can't bounce again, but when you do break it, it's support, then that opens the door. So that's it. So I will say right now, without mixing words, it's objective to add on, if that was your plan, to GDX. I'm not crazy about how gold's holding up. Gold's been very resilient, but with that being said, GDX is below T1. And again, ideally what you want to see is gold to take out its recent low as well. And then that will most likely open the door for a bigger drop there. So let me do that. Let me wrap this one up, get it out to you. I've got a little time here before I have to leave for the next meeting. And if there's anything else I missed, I'm looking at my notes. I really just wanted to cover those volume patterns, show you this is very indicative of a massive short covering rally. But with that being said, a plan is a plan, and I don't see any reason to modify it right now. So these short covering rallies can continue for some time. Traded enough of them to know that. Remember, let's not forget, I had to reply to somebody yesterday. Let's not forget that we caught the very first half of this, being bullish and expecting the rally up to anywhere in this bounce target zone. And so that was up until today, really, the bulk of it right there. That was a 17% move off that April 7th low. And on that, just before I wrap up, that on a related note, because I just threw out SOXX the other day, the semiconductor sector ETF, which again is also a long-term, well, the final target was hit here at that low on the April 7th low, and that was T6 primary uptrend line as well. When you look at the Phillips SOX semiconductor sector ETF, that's that long-term uptrend line here. I have it better for you here if you haven't seen it. SOXX, this one right here, and it's on this board. No, I have it on the monthly. There it is. You can see that primary long-term uptrend line, which we bounced off of. But when we come back to it this week, right now, you can see the semis are testing their 200-day simple moving average as well, or 40-week on the weekly chart. Again, let's see how the week closes on these guys. My preference remains, again, just because we're testing, I pointed out the first few tests last week as some of these market leaders started coming up. We have a few of them getting above there, or above right now. So again, to reiterate, my preference is not, NVIDIA was kind of a one-off. I see the opportunity there. I like NVIDIA for the long-term short, and SOX, the semis. I think they'll roll over first, probably before the rest of the market. But as far as QQQ goes, let's see us fall back down below those trend lines before adding back any short exposure, at least for me, and or getting aggressively short. All right, I'm going to wrap the video up here, and just noticed a bunch of questions. I'll do my best to get back to those all by the end of the day. Quite a few comments, and if I don't, I'll be back this evening later, about probably 6:30 or so, and I'll see if I can get back then. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.